Welcome, accounting boffins. You with Ashraf Patel and the crew. And our topic for discussion today is asset disposal. Yes, I can already see the reaction on some of your faces to saying, no, we find it too difficult. Guys, this is one section. Once you master it, once you follow a certain procedure, and once you understand the concepts behind it, I promise you guys, it will be a piece of cake. Chocolate cake. So you know my favorite now. Okay, so when dealing with asset disposal, what do we deal with? What are the processes that are affected when a business sells fixed assets? Obviously, remember something, a business buys or acquires assets not with the intention of selling it. The asset was acquired with the pure intention of using it. But obviously, when it outlives its useful ability, or because of technological advancements, it becomes necessary to sell old assets. And that's what we refer to as asset disposal. So you can see there are processes in place that needs to be followed before we can dispose of an asset. So now, once again, let's look at our concept map. We know, look at the methods of depreciation. By now, you should be au fait, you should be actually screaming out the answers. Remember, one is the cost price method, and the other is your reducing balance method, or diminishing balance method, or carrying value. So look at the question, and it will indicate to you as to what method of depreciation is being used. Now, when it comes to asset disposal, clearly, there are certain steps to follow, right? And that's what we're going to be doing right now. Why will a business dispose of an asset? One, we said, the existing equipment has become old. The vehicles may have been involved in an accident. It's possible, right? And as a result, it now has to be disposed of. That means we can't keep it anymore. That is the reason why a business will dispose of the fixed asset. One, think of another one. A business will dispose of the fixed asset because there's damage to the asset and therefore the business cannot use it anymore. Another important one, the asset is out of date, meaning it's outdated. It cannot be used anymore. For a business to remain competitive, it needs to have the latest assets so then it can compete in the market. Now, when we are disposing of an asset, right, it is important to remember that we can, one, sell the asset for cash. Immediately you know you're dealing with a bank account. Why? Because money is coming into the business, right? If we sell the asset on credit, it means that we've sold the asset to a debtor. Therefore, you have debtor's control coming in. I'm just showing you the various ways in which we can sell the asset. Number three, if the owner decides that they're going to take it for personal use, immediately you know. What do you know? The acronym is POP. What do we mean by POP? When you see the words personal, owner, or private, immediately you link it to your drawings, right? Clearly you can see there is also a possibility where the owner takes the asset for personal use, or the asset could be given as a donation. Then clearly you're donating it to an indigent school or to somebody that needs it, an orphanage or wherever else, and therefore that will be seen as a donation. Another way we can dispose of an asset is when the vehicle is traded in, right, for a new one. Now remember, like we said, the vehicle has been used, it's now served its purpose, it's now old, we then trade it in. A trade-in basically means the following. You're actually selling that vehicle to the motor dealer. and buying another one in its place. That's what we mean by a trade-in. And obviously, the contra there is creditor's control. The assets can be damaged and an insurance claim can be lodged, or the asset can be scrapped, meaning it can't be used any longer and it now has to be scrapped. So those are ways of disposing of an asset. Okay, now what steps do we follow? Now this is important. We start off by saying, number one, calculate your depreciation for the current period. That means if you're disposing of an asset sometime during the financial year, so here we go. If your year started in January, on the 1st of January, and it ends on the 31st of December, clearly you can see, if we say we sold the asset on the 30th of June, right? So what have you done? You've used the asset pro rata. What do we mean by pro rata? You've used the asset for 6 months, from January to June. This means when you are calculating your depreciation now for the 6 months, you'll say amount, rate, and time, and the time component will be 6/12 because that is the amount of time that you have used the asset in this financial year. What's my entry? A debit to depreciation and a credit to accumulated depreciation. Analysis once again, debit depreciation, imputed expense, credit accumulated depreciation, it's a negative asset increasing in value, therefore debited. So step number one, depreciation. Number two, the cost price. What are you going to do with the cost price of the asset? You're going to remove the cost price from the asset account into another account. Here we go. Transfer the cost price of the asset. You debit an account called asset disposal, right? The account is called asset disposal, right? And we're going to debit that account. Why? Because we're removing the asset from where? From the asset account. In other words, look at this here. Here we go. There's the asset, there's the account, let's say it's vehicles. So you're debiting asset disposal and you're crediting the vehicles account. What have you done? You're removing the asset from the vehicles account and transferring it into an asset disposal account. Okay. So that's the removal of the cost price. Now, the third step is the accumulated depreciation. Now, very important. Calculate the total accumulated depreciation at the date of disposal. What is that? It's your balance at the beginning of the year plus your depreciation up to the date of sale as you calculated in the previous example. Remember we said here, where you calculated, we said, where we go? Let's go back. Here we go. This depreciation that we calculated here, this one here, that will be added to your balance at the beginning of the year, and the total amount will then be taken out of your accumulated depreciation account. So in other words, this is what you're looking at. You're looking at, here's the two accounts again. What we said was, it's your accumulated depreciation account and your asset disposal account, right? So what we're saying, a debit to accumulated depreciation, you're going to take it out of here and you're going to transfer it into your asset disposal. What amount are you transferring? The total amount. And what is the total? Your balance at the beginning of the year plus the depreciation for the current, the pro rata depreciation for the financial year. So once again, what's your double entry? A debit to accumulated depreciation. What are we doing? Why are we debiting accumulated depreciation? We're removing the accumulated depreciation. Watch, you're taking it out of that account and transferring it where? To asset disposal. Notice something is happening here. What is happening? You're transferring all the information regarding the asset that you're disposing of to an account called asset disposal. Right. Now I'm going to tell you something very interesting. What type of an account is asset disposal? Have you ever thought about it? Asset disposal is what we refer to as an interim nominal account. I repeat, it's an interim nominal account. What do we mean by interim? It's set up for a specific purpose to transfer all the information of the asset into the asset disposal account. Once you have transferred all the information, it serves a particular purpose, and then, yes, it self-destructs. You'll notice that it closes off and you'll end off with either a profit or a loss on sale of asset. You want to know more? Stay with us. You'll see exactly what I'm talking about. Okay, so this was step number 2. We had step number 3 actually. We did the depreciation, which was number 1. Number 2, we did the cost price, the transfer into the asset disposal account. And number 3, we transferred the accumulated depreciation. Okay, so my double entry once again, debit accumulated depreciation, credit the asset disposal. So in other words, if you're looking at your asset disposal, you find now that you've got 2 components in your asset disposal. You've got the cost price and the accumulated depreciation. Right. Now, if you sold the asset for cash, very simple. You debit bank, credit the asset disposal. Simple. Bank is an asset increasing in value, therefore debited, credit your asset disposal. Why? There's money coming into our account, and for what was it? It was for the asset. Notice that the entry for the disposal has nothing to do with the vehicle's account. Why not? Because the asset, or whatever asset, it may be equipment, is no longer in the asset account. It's now in the asset disposal account. Therefore, your credit in asset disposal. Next one, if you sold the asset on credit, remember we said the different ways, you'll debit debtors control, the credit remains constant. Yes, you're going to credit your asset disposal. Exactly the same as the previous one, a credit to asset disposal. Now the third way of disposing of an asset is if the owner took it, debit drawings. But the credit is constant, guys, and that's what I want you to see. That no matter how you dispose of an asset, you will always credit the asset disposal account. The detail will change depending on how you disposed of the asset. Then we looked at donations, a debit to donations. Why? It's an expense. Debit donations, credit your asset disposal account. Once again, no change. So no matter how you sell or dispose of the asset, you will always credit your asset disposal. If you traded in this vehicle on a new vehicle, you'll debit creditors control. Let me explain this one to you so you can see why you're doing this to creditors control. So here's your creditors control. You bought an asset, a new one, for let's say 200,000. Okay? Now, if you're selling your old vehicle for 50,000 Rand to the dealer, watch, you debit your creditors control. Why are you debiting creditors control? Because you don't owe the dealer 200,000 anymore. You owe them 200,000 less the 50,000. And there we go. My credit entry in the asset disposal account of 50,000 Rand. So what was that? That was the trade-in. If perchance the vehicle was insured, the insurance company have accepted the claim but haven't paid us as yet, you debit an account called insurance claim, right? It's an asset account. It's like a debtor. They're owing us the money. Debit insurance claim, credit asset disposal. So clearly you can see from what we have done here I've shown you all the different ways in which we can dispose of the asset. A quick recap: if you sell for cash, debit bank, credit asset disposal. If you sell on credit, debit debtors control, credit asset disposal. If the owner took it, debit drawings, credit asset disposal. See the common entry, a credit to asset disposal. Donated it, debit donations, credit asset disposal. If it was an insurance claim, debit insurance claim, credit asset disposal. And a trade-in, a debit to the creditor's control and a credit to asset disposal. So no matter how you dispose of the asset, you will always credit the asset disposal account. It's a debit entry that will change depending on how we dispose of the asset. I'm sure I've piqued your interest on asset disposal. You want to know more? Stay with us. See you just now. Welcome back, accounting boffins. Remember, we're busy with asset disposal. Once again, before we continue, we said important whenever we're doing asset disposal, keep in mind that the method of depreciation that you are using, because obviously it's going to impact on your calculation, know your two methods. You're either going to use the cost price or you're going to use the carrying value, right? So those are the two methods of depreciation. When it comes to the asset disposal, we said there are certain steps that you follow, right? Let's look at this, a quick recap in terms of the disposal. We said, 1, if you're selling for cash, you're going to debit bank, credit asset disposal. Why? Let's analyze the transaction. Money coming in, debit bank, credit asset disposal. Number 2, if you sell on credit, what happens now? No money is coming in, but in place of that, you have a debtor. So you say debit debtors control, credit asset disposal. Notice the asset disposal, the credit does not change. And that's important. Third one, if the owner takes it, what happens now? Taken by the owner, a debit to drawings. Right? Because obviously drawings is the owner's account reflecting what the owner owes the business. A debit to drawings, credit asset disposal, no change. Next one, if we look at the next one, we say it was donated, debit donations, which is your expense, credit asset disposal, no change. Asset disposal. In each case, when we're disposing of the asset, the credit entry will always be in asset disposal. If we trade in a vehicle, remember what we said? Trade in means we are selling the vehicle to the motor car dealer, therefore a debit to creditors control and a credit to asset disposal. And the last one, an important one, is the vehicle was insured. The insurance company have accepted the claim but haven't paid us as yet. We'll debit insurance claim, right? Which is an asset account. And very important, guys, insurance claim will appear under trade and other receivables in your balance sheet. In your statement of financial position, you'll show insurance claim as an asset. The insurance company owes you that money. Debit insurance claim, credit asset disposal. So what is important is immaterial of how you dispose of the asset. You'll always credit the asset disposal account. The debit will depend on how you dispose of it. Okay. So now I'm going to show you an easy way to calculate either a profit or a loss on sale of asset. Here goes. Step number 1. Do your depreciation for the current year. So let's use our own figures because this is an example. So we got a depreciation of 6,000 Rand for the current year. Obviously, you would have to do a calculation. I'm just showing you how you slot in the information. Right. The cost price of the asset was 50,000. There we go. The accumulated depreciation was 30,000 at the beginning of the year. Immediately you put a plus sign alongside it. So what I'm saying is that whenever you're doing an asset disposal question, use this table. It makes your life much, much easier. Right. So 30,000, what was the current depreciation? 6,000. Add the two together to give you a figure of 36,000 Rand. What was that? It was your balance at the beginning of the year. There you can see the beginning of the year balance plus your current year's depreciation to give you a total of 36,000 Rand. Next step, calculate the carrying value. What's my carrying value? Cost price 50 minus the accumulated of 36 will give you a figure of 14,000 Rand. Right? Now we come to the selling price. My selling price is 16,000 Rand. Right? Again, look at the ways in which we can sell the asset. We've discussed that at length. We're not going to labor the point. I'm sure you understand it by now. Clearly, you can now see something here. And this is what I want you to see. If your selling price is greater than your carrying value, which is the example that we have in front of us, our selling price is 16,000 and our carrying value is, therefore it's greater than our carrying value of 14,000. This means that you're going to make a profit of 2,000 Rand. In this case here, there's a profit. When what happens? When your selling price is greater than your carrying value. However, if your selling price is less than your carrying value, then certainly you're going to be making a loss. So here, without making a single accounting entry, by using this table, you are able to ascertain whether you have made a profit or a loss on sale of asset. Got it, guys? Again, depreciation, cost price, accumulated depreciation, carrying value, selling price, profit and loss. Okay. Now, what is an asset disposal account? I've told you this before. I'm repeating it. The asset disposal account is a nominal. I'm going to add here an interim nominal account. Interim means it's an in-between account. It serves a particular purpose, right? It's open specifically for the disposal of this asset. And what did I tell you? I told you it self-destructs. After it is closed off, it will not be used anymore. So once it's served the purpose of collating all the information regarding the asset that you are disposing of, you will notice that it will self-destruct, meaning it will close off by itself and you will no longer have use for the account anymore because it will either give you a profit or a loss on sale of asset. Let's look at the information that we have here. We are told the financial year of ABC Traders ends on the 28th of February 2020. The following balances appeared on the 1st of March 2019. Equipment 200,000, accumulated depreciation 50,600. All right? That's the information that we have. On the 31st of August 2019, ABC Traders sold old equipment on credit to PZZ for 4,500. The original cost price was 11,000. The total amount written off for depreciation at the end of the previous financial year was 6,000. Depreciation is calculated at 20% per annum at cost. Okay, that's the information that we have. What are we going to do? Step number one. Because we are using the cost price method of depreciation, like we said earlier on, remember, they're telling you it's at 20% per annum on cost. So the cost price of the asset was 11,000. Here we go. Start off by taking your 11,000. Remember your art, amount, rate, and time. So you take your cost price of 11,000 times 20%, which is your rate, times 6 over 12. Let's do that. So we take our 11,000 times 20% will give you that, times 6 divided by 12 will give you a figure of 1,100. Now, what is the 1,100? The 1,100 is your current year's depreciation. Why? Because this equipment was sold on the 31st of August. Can you see? Sometime during the financial year. Okay, this means therefore that we've calculated our current depreciation. So remember the table that we alluded to just now? Here we go. 1,100 is my depreciation. In this case here, I had to calculate it. Step number 2, the cost price. The cost price of my asset was 11,000 Rand, right? Step number 3, the accumulated depreciation at the beginning was 6,000 Rand. That was information that was given to us. Here we are told that your depreciation at the end of the previous financial year was 6,000 Rand. In other words, that was your accumulated depreciation at the beginning of the financial year. End of last year, beginning of this year. This means therefore that there's you start off your accumulated with your 6,000. Remember what we said? Add your current year's depreciation. Very, very important. Add the 1,100 to give you a figure of 7,100. In total, you add the 6,000 plus the 1,1 will give you 7,100. Next step, what are we going to do? Calculate the carrying value. Let's do that. So we take the 11,000, which is your cost price, 11,000 minus 7,100, which was my accumulated depreciation, to give me a figure of 3,900. There's my carrying value. Once again, cost price minus the accumulated depreciation to give me a carrying value of 3,900. Okay, now this asset was sold for 4,500. Remember what we said. If the selling price is greater than your carrying value, then you're making a profit. Was this the case? Yes, it was. The selling price was 4,500. The carrying value was only 3,900. That means we made a profit on sale of assets of 600 Rand. Remember, it can happen that you can sell for less than the carrying value. Then obviously you're making a loss on sale of asset. Okay, so now, watch. Here's my asset disposal account. And this is what I wanted you to see. Step number 1, there's your cost price, okay, of 11,000 Rand that you transferred. Remember, the entry for the first one, the depreciation, was a separate entry. What did we do with that one? We said debit depreciation with the 1,100, and you credited accumulated depreciation. Now watch, here's your accumulated depreciation. I'm just separating this particular asset to give you clarity. This one had a total of 6,000 as an opening balance plus the 1,100, which is this contra entry here for the current year, where we debited depreciation and credited accumulated depreciation. Watch, the 7,700, there we go, 7,100, sorry, not 7,700. It's 6,000 plus 1,1 will give me 7,100. There we go, there's my 7,100. Right, this was sold on credit, so my contra is debtors control. How much? 4,500. Watch what happens now. We're now sitting with a situation where if you add this up, it gives you a total of 11,600. That's your 7,100 plus your 4,500. And clearly you can see that you've got a profit on sale of asset of 600 Rand. Does this tie in with my table? Perfectly it does. Can you see? Profit on sale of asset of 600 Rand. Watch, when I drop the account, there's my profit on sale of asset, 600 Rand. Okay, so once again, remember the steps. Depreciation, pro rata, amount of months that you have used the asset. Number 2, cost price. Number 3, accumulated depreciation. Start off with your opening balance, add the pro rata depreciation. Work out your carrying value. What's your carrying value? Cost price minus accumulated depreciation. Just a quick one here, guys, while we're at it. You saw the entry for depreciation, the cost price accumulated. Why was there no entry for the carrying value? Any ideas? Carrying value, there's no entry for it because there's no account. However, this one here, when you're doing this under examination or whenever you're working with an activity, always put a big 3 there. The big 3. What's the big 3? Note number 3. In note number 3, you indicate, right? What do you indicate? Disposals at carrying value. Can you see how this table is going to assist you with your disposal and in completing your note number 3 as well? Okay. So, just a quick one in terms of our theory. What is an insurance policy? An insurance policy is a contract which the insurance company undertakes on payment of a premium to pay compensation for the damage or loss that the insured property may suffer as a result of fire or theft. That's your policy. I'm explaining these terms to you because of its importance. That's your contract with your insurance company. Okay, that's your insurance policy. Then you have, what is an insurance premium? An insurance premium is the amount that we pay on a monthly basis to the insurance company by the policy holder. So if you are the policy holder and you are paying insurance on your vehicle, then on a monthly basis you will pay your premium, right? Which is payment in advance for the full financial period. So you're going to pay for a 12-month period. And then the third one is insurance is regarded as an expense and is recorded in the income statement. So yes, your insurance premium, your insurance is an expense. It will go in your statement of comprehensive income or your income statement. Remember, we're using the terms now, the new terms, statement of comprehensive income, which is your income statement. It will be shown as an expense. However, when we talk about an insurance claim, what do we mean by that? By that we mean it's a written letter notifying the insurance company of a request or payment of the amount specified. That means if they tell you the insurance company have accepted your claim, they haven't paid you as yet, that claim will be a debtor. They owe you that money and it will appear in your statement of financial position under trade and other receivables. Okay guys, so clearly understand what we mean by an insurance policy, an insurance premium, and an insurance claim. Do not confuse the different concepts here when it comes to insurance. So your insurance policy is just the policy that you sign, a contract between you and the insurance company. Your insurance premium is your expense, which is paid on a monthly basis. But your insurance claim is a claim that you make against the insurance company. If they accept the claim, they're owing you that amount, and that will appear in my balance sheet under trade and other receivables. Okay, guys, we've done extra work on asset disposal. We're going to do more after the break, so see you just now. Welcome back, Accounting Boffins. You're with Ashraf Patel and asset disposal. Yes, now remember what we said. We said when we're dealing with asset disposal, what is very important for us to take into consideration is the fact that asset disposal, we said, is an interim nominal account, right? We're recapping an important feature of the asset disposal account. It's an interim nominal account that is drawn up to determine the profit or loss on sale of asset. And once we've done that, it then self-destructs, it closes, and the profit is then transferred to a profit on sale of, it's transferred to a profit on sale of asset account or a loss on sale of asset account, depending on whether the selling price was greater than the carrying value or whether the selling price was less than the carrying value. Okay, So now, how will we look at the asset disposal in terms of the accounting equation? Here we go. Watch. Step number 1, debit depreciation, credit accumulated depreciation. Watch, your assets are decreasing because accumulated depreciation is a negative asset, and your owner's equity is decreasing because your expense account decreases the owner's equity. Liabilities remain unchanged. Look at your asset disposal. This is the cost price. You debit asset disposal, credit the vehicles. Watch, you're removing the asset from the asset account, so assets will decrease, and your owner's equity will decrease in terms of the asset disposal component. Now we come to accumulated depreciation. By debiting accumulated depreciation and crediting asset disposal, watch what happens. You are debiting, your asset is increasing. Why is that? When you decrease your negative asset, you are increasing your asset. There the asset is increasing and your owner's equity is increasing because you are crediting your asset disposal account. So you look at asset disposal, treat it as a nominal account. When you're debiting, it decreases the owner's equity. When you're crediting, it increases the owner's equity. Right, here's the asset that's being sold. Clearly you can see debtors control is an asset, increasing your assets. Asset disposal, you're crediting your owner's equity, therefore plus. Now watch what happens at the end, and that's the important part. Because there was a loss on sale of asset in this particular example here, you find that your owner's equity will increase and decrease by that amount. So what has happened? Your asset disposal account closes off and you are debiting a loss on sale of asset account, meaning you've made a loss on the disposal of that particular asset. So this is with regards to the accounting equation. Now, another important calculation that learners often are challenged with is how do we do the depreciation calculation? I want you to separate it into 3 parts. Number 1, sold. Number 2, unsold. And number 3, new. Always keep these 3 depreciation entries separate. Let me illustrate by means of an example. Here's the information that we have. Depreciation is at 20% per annum on the diminishing or the reducing balance method, right? It's from January the 1st to the 31st of December, that's your financial year. Beginning of the year, you have vehicles valued at 520,000. The accumulated depreciation is 200,000. The new vehicle that was purchased was on the 1st of October 2020 was 600,000. The vehicle sold, the cost of it on the 30th of June was 100,000, and the accumulated depreciation of the vehicle that we sold was 80,000. Right, step number 1, let's do the sold asset. What do? Because it's a diminishing balance method, we take the cost price of 100 minus the 80 will give me 20,000, right? That's my carrying value. What do I now do? Amount, remember the story about art, amount, rate and time. Take your 20,000, the rate is 20 over 100 times 6 over 12. What will that give you? Clearly you can see. Let's do that. 20,000 times 20% is equal to that times 6 divided by 12 will give you a figure of 2,000 Rand. So that was a depreciation on my sold asset. So step number 1, I've done my sold asset. Number 2, unsold. Very important, because we are using the diminishing balance method. You will always use 2 brackets, the cost price bracket and the accumulated depreciation bracket. Got that? Because it's a diminishing balance method, use 2 brackets. Step number 1, take the value of your assets at the beginning of the year, 520,000. Here we go, 520,000 minus the 100,000 that we sold. Let's do that. with the red, there's the sold one. Can you see? So you take the 520,000 minus the sold 100,000 will give you a value of 420,000 in terms of the first bracket. Second bracket, opening balance, let's find it. Accumulated depreciation, opening balance, 200,000. Here we go. Take the 200,000. There's my 200,000 minus the accumulated depreciation. Now be absolutely spot on with this one here. It is the value of your accumulated depreciation at the beginning of the financial year. In other words, the asset that you disposed of, this one here, it is that figure that you wanted, the 80,000. Here we can see it, minus the 80,000 will give you a figure of 120,000. So what have we done? That is my accumulated depreciation bracket. Because it's a diminishing balance method, we use two brackets, the cost price and the accumulated depreciation. So now 420 minus 120 will give you your carrying value of your unsold vehicles or the asset at 300,000 Rand. Take art into consideration, amount 300,000, rate 20 over 100, times we had the asset for the entire year, 12 over 12. Let's do that calculation. Here we go, 300,000. Is it 300,000? Yes, times the 20%. Okay, and obviously I said 12 over 12 is 1, so obviously your answer won't change there. It is 60,000. But get into the habit of using the time component in your calculation, even if it's 12 over 12. Okay, so what's the 60,000? It's your depreciation on your unsold asset, right? So you've got two components worked out already. What have you got? You've got we've got the new asset now. We were told that we bought a new asset. Let's see if we have the information. Here we go. A new vehicle was purchased on the 1st of October 2020. There it is for 600,000 Rand. So what are we going to do with it? We're now going to calculate the new asset. 600,000 Rand minus 0. Why is that? My method of depreciation is the diminishing balance method. The new asset was bought this year. Obviously, it has no accumulated. However, I'm showing you that you're still subtracting a 0 because it has no accumulated. It is a brand new asset bought this year. Therefore, 600,000 minus 0 will give you 600,000 as your amount. Your rate is 20 over 100. Your time when it was bought. So in this financial year, it was bought in October. So October, November, December, we used it for 3 months, 3 over 12. Let's do that calculation. So it's 600,000, right? Times your 20% will give you that, divide by, times 3, divide by 12, and your answer is 30,000 Rand. Okay, so here we go. There's my 30,000 Rand. So now, what components do I have for my depreciation? 1, the sold 2,000 Rand, right? The unsold 60,000 Rand. The new 30,000 Rand. This is your total depreciation figure that will appear in your statement of comprehensive income. Under the expense depreciation, we will say depreciation is made up of the 2,000 Rand, 1, 60,000 Rand plus the 30. So my total will be 92,000 Rand. Can you see that? So what have you done? You've now worked out the depreciation on all your assets in the business, right? So this is the final figure that you need for your statement of comprehensive income is your 92,000 Rand worth of depreciation. So what do we remember? 1, the following steps must always be taken into consideration when we are working out the asset that we are selling. Step number 1. Calculate the depreciation. Remember, we said amount, rate, and time. So this will be the pro rata depreciation for the time that we have used the asset before we dispose of it. Right, step number 1. There we go. Number 2, transfer the cost of the asset to the asset disposal account. Okay? So step number 2, let's do it with the entries as well. While we're doing the steps, let's do entries as well. The first one, calculate the depreciation, debit depreciation and imputed expense, credit accumulated depreciation, your negative asset. Number 2, transfer the cost price, debit asset disposal, credit the vehicles or the asset account to remove it from the asset account. So you're debiting asset disposal, which is an interim nominal account. When you debit it, treat it as an expense. When you credit it, treat it as an income. 3, transfer the accumulated depreciation into the asset disposal account. What's my double entry? Debit accumulated depreciation. You want to reduce the accumulated depreciation. You want to take it out of that account. Debit accumulated depreciation. Negative asset decreasing, therefore debited to accumulated depreciation. Credit the asset disposal. You're removing it and transferring it into the asset disposal account. Clearly you can see the entry is debit accumulated depreciation, credit asset disposal. Right, step number 4. Calculate or determine the selling price of the asset. We know we've dealt with this at length. We can sell for cash, we can sell on credit, we can trade it in, the owner can take it, we can donate it, it can be an insurance claim. In each of the cases, you'll debit the respective account depending on how you sold it. In each case, you will credit the asset disposal account with the selling price. The detail will be how you dispose it. Bank, cash, credit, debtors control, trade in, creditors control, and so forth. You will then complete the selling price. Once again, keep this in mind that if you are trading in the vehicle or the asset, it's a debit to creditors control, because obviously you are selling that vehicle or that asset to the dealer. Now you work out the final step, the profit or a loss. What do we know here? If my selling price is greater than my carrying value, I'm going to get a profit. If my selling price is less than my carrying value, I'm going to get a loss. And if my selling price is equal to my carrying value, there's no profit or no loss. All right. Now remember, there are 2 things that you need in your statement of comprehensive income. You basically need 2 figures. What do you need? Either the profit or loss on the asset, on the sale of the asset, and the second one, the second important component is your depreciation on the assets that you have worked on for the year. Okay, guys, so you can clearly see now, I'm sure you can't wait to get your hands on an activity to try and work out a question on asset disposal, because you've seen a completely new way how to deal with an asset disposal. And I'm sure that energy is now you're ready to use it to work out past papers and to ensure that you ace this type of question in an activity, in the classroom, or in an exam, or in any case, in any condition where you are faced with a question on asset disposal. Remember, the 2 most important things is you want a profit or loss on sale of asset, and you also need the depreciation figure that needs to go to your income statement. From me, Ashraf Patel, and the crew, guys, we've worked very hard for you. We want you to now practice, practice, practice. Aim for the moon, and perchance, if you don't get there, you'll be an accounting star, Ashraf's accounting star. Until next time, goodbye.